Let's connect with Arvind Sanger as well, who's joining in. Arvind, wanted to get in your take first up on all of the data points that have come in from the United States. The fact that we did see quite a stellar move kicking in, fresh record highs after the November jobs report. What's the sense that you're getting when it comes to investor hopes for the Federal Reserve cutting interest rates?
Well, I think the market's getting quite confident or quite hopeful that we're going to get another 25 basis point cut by the Fed. So that seems to be more or less baked in. So I don't see that as a major factor. It's already been discounted. I think to the extent that there is any commentary from Powell that is either suggesting a hawkish or a dovish follow through, that'll be a little more important as to what comes next if they do cut 25 basis points as most are expecting. So I think the US data, there's one other piece of data, the CPI data that is coming out in the coming week that could be impactful, but barring any big surprises there, I think we're on set. We're on track for a 25 basis point cut.
How crucial would be the entire rollover from the Democrats to the Republican? And how do you see the first 100 days of financial markets moving when Donald Trump takes over?
Well, so there are two competing, I think, narratives. One is the narrative on regulation and maybe even on taxes, clarity on greater confidence in taxes not going up. But on the other hand, and maybe some cutting in government spending. So those will be the positive parts of what the market will like. The negative part that so far has not caused too much concern is President Trump's threat of some unprecedentedly high tariffs and whether that could be inflationary. And the third thing that has gotten no attention is that President Trump promised a lot of tax cuts, for people in the service industry, for tips, for rolling back on the SALT deductions having been removed, and a number of other tax cuts, which could be deficit increasing. So, those are things that we're going to have to watch. But I think right now the focus is on much more business-friendly regulation. And much greater visibility that taxes are neither going up and maybe even be not going up and may even come down some.
Sure. Arvind, what's the take on India? Because so far this month, at least the FIIs have come back with a vengeance. It's a different thing that DIIs have been selling in India. But do you think that rough patch and the earnings disturbance, if you will, is now behind us and in the price?
I'm not sure that it is time to declare victory completely. Clearly, the magnitude of the selling in October and in November that followed through was unprecedented in terms of there was a lot of selling. So I think investors came into the fiscal fourth quarter, the calendar fourth quarter, hugely overweight India versus other emerging markets, and I think that's corrected. So at this point, I think to the extent that there's liquidity flowing, India is getting its share. But India still has questions to answer. Was the September quarter slowdown and disappointment in earnings a one-time thing? Is the worst behind us? And can we see an improvement? So I think Indian market is certainly stable, but for a meaningful recovery from here, we will need to see better visibility on economic data.
Right. Okay, Arvind, great to have you on the show. Thanks as always for taking the time out.
Thank you.
If you like this video, then like, share and subscribe to ET Now.